Okay, I'm going to try to make this quick. I actually hit start streaming and not start recording, and I didn't have anything up to actually stream to it. So let's look at one thing that is very important in this, and it is going to be right here. This is the open interest for ES futures, non-manipulated market. When it comes down to the numbers, you can manipulate SPX all you want with volatility in the VIX. It's all manipulated. It is 1,000% manipulated. If you have enough money to manipulate ES, good on you. $1,000 margin, and you would need to somehow manipulate ES with a $1,000 margin. And you know, let's say you're trying to manipulate with 50,000 contracts. Okay, 50,000 contracts is a drop in the fucking bucket in comparison to the 2 million to 3 million contracts. $50 million for 50,000 contracts. If you were really trying to manipulate, what are you going to do? 500,000 times 1,000? $500 million? That's still only 500,000 contracts. So, you know, it's not really happening that way because you got to offload those contracts. It's the difference. You're not selling options out of the money to manipulate VIX, to go ahead and increase the volatility of VIX and spook the markets and cause fear, right? This is something you cannot manipulate because you still have to offload those positions. You can sell fucking out of the money SPX calls and puts way far out of the money, and some dumbass is going to be buying them, and people are going to be buying them. And as long as that happens, you can go ahead and increase the VIX artificially if you're institutions. You cannot artificially increase or decrease the moves of the market of ES, right? This is something that is not manipulated. You cannot manipulate this. I have not found a way that this could occur. Okay, June 13th, May 23rd, 2023 to June 13th, 2023. So we are going to pull up an ES chart. Pull up an ES chart right here. And we are going to find on the daily chart here, we are going to find May to June 2023. So right here we have May 23rd, and right here we have June 13th. May 23rd and June 13th. Okay, so this is where open interest spiked to about 3 million. I started to have high hopes that we were going to have a bullish move forward and the bear market is over and the market's going to return to a healthy movements. But unfortunately, we went from 2.2, 2.1 million open interest to 2.9. Then we immediately following that saw a decrease. See this decrease in open interest. We decreased from 3 million to about 2.2 million. Then what did we do? We came up here and we got 2.5 million on September 12th. But immediately following that, we decreased open interest. October is a key time frame because that was the bottom of it was the start of the bullish leg during Biden's markets in 2023. So this is the zone where open interest in this green box. This green box is where open interest increased to 2.9 million. When price moved higher, let's go ahead and just bring this up, right? Price moved higher, but open interest decreased. Price moved higher, open interest decreased. Price moved lower. Where did we find that spike? We found that spike at September 12th, 2023. Where is September 12th? We saw a spike of open interest right here, September 12th, 2023. I need an arrow. Where's my arrow? Where's my arrow? Not emojis. Where's my arrow? Ah, right there. Okay, so September 12th. In this area right there. Open interest increased again, but then immediately decreased. Open interest decreased. Then we started to see our bullish move. Here is October 23rd in this area, 2023. We saw open interest decrease, but price started to rally. Now let's zoom out and watch this rally. This rally is where the short-term participants were going long and the long-term participants were providing the liquidity for the move higher. I kept, thinking that, retail was providing the liquidity, but, they provided the liquidity to the shorts. We stagnated up here. We found a balance up here and then sold off. Dalton said this move was lacking the long-term participants. Lacking the long-term participants. Look at open interest. It's low. All the way through this move, open interest was low, which means there's no long-term participants. It was short-term participants moving the market. This area here was our December rollover range. This is our March rollover range. We had price move lower, retrace, second leg, ignore, third leg is the measured move. Take that first leg, copy that, ignore the next move down, put it at the high of the third move down, right? This little small move is nothing. Ignore that. That's the second leg. Take the third leg. We reached a measured move. Long-term thesis-wise, below 5,100 on ES is not something you should be swinging. That's the measured move target, okay? But let's look at this candle where we found buyers. Is it a coincidence that we fucking ticked right to the freaking level where if you zoom out, we had previously 3 million open interest? Is it a coincidence? No. Is it a coincidence that utilizing open interest in the positioning of the commercial and non-commercial traders on the Commitment to Trader report, is it a coincidence that we formed a balance, broke out of the balance without the long-term participants being long? Is it a coincidence that we have retraced all the way down close to it? No. Also, is it a coincidence that when you take the cost basis and you copy it 4 times, you had buyer exhaustion? No. And is it a coincidence that all we needed was a catalyst to bring prices back down to levels where they should be? No. Okay, let's look at one other thing. Let's look at the trend line coming from the COVID lows up. What did we do? We retraced back to it and then broke below it. Why on God's green earth would anybody be swinging longs this far away from the trend line without long-term participants correlated long in the markets? Open interest is not on your side. Non-commercial traders, large institutions were net short all the way up. Yeah, they flipped net long a few times. They got to make some money. But they were net short. Commercial traders, the producers, the ones that hedge the markets, they were net long. So is it a coincidence? Commercial should be net long when markets are moving higher. I'm sorry, non-commercial, the institutions, the hedge funds, the banks, those Those large speculators should be net long when the prices are moving higher. Instead, they were net short. This was not sustainable, especially with a decrease of open interest going up. And then commercial, those that hedge the markets, they were net long. So commercial when it's net short, non-commercial when it's net long, and we have a 3 million open interest, then I'm going to say we have found the bottom and we are never going to reach these levels again. Okay. The other thing I want to get into, if you look at the history of the S&P 500, like I said, you cannot manipulate open interest because it is the actual participants holding with margin, right? And they don't have strike prices that they can manipulate the VIX and other things by selling out of the money calls, out of the money puts to go ahead and manipulate VIX higher, to stoke fear into the markets, to drive prices, right? Yes, SPX, don't get me wrong, volatility increased because they're like, fuck this. This is money-making season. We are going to sell out of the money calls and out of the money puts that are not going to get touched, and we're going to make our money and move the markets. The only reason why, in my opinion, options are relevant is because they drive, the SPX options drive the volatility in the market. VIX is correlated, I believe, off, like, don't quote me, a 27-day out of the money option strike prices for puts and calls. That's what drives VIX. That's what drives the volatility of the market. That's what stokes the fear. When VIX increases, fear is at an all-time high. When VIX is increasing and is at an all-time high and markets are selling off, do you really think that institutions are panicking? Do you really think that overall they're not doing this on purpose to manipulate VIX and manipulate the volatility to go ahead and drive prices lower after a catalyst of Liberation Day, which even Daddy Dalton said that this was being driven by short-term traders and this retracement was going to happen? Do you not think that this is all one big, I'm not going to say conspiracy, but one big manipulation? And I mean manipulation as in people aren't smart enough to recognize that. I'm not saying I'm a fucking genius, but when the markets are moving higher with a lack of open interest, with the institution short, which those that hedge the market, the commercial traders, are long, prices are going higher and people are hedging their short positions. People are hedging their overall positions, which are short, and they're long. Come on. Let's just be honest. And when the market's finally moving, they're like, okay, this is the time. Let's go ahead, sell some fucking out of the money puts and out of the money calls. Let's go sell those. Let's spike VIX up and let's go ahead and get this move going. Wash retail out. Wash all these dumbasses that were buying all the way up here and holding. Wash them out, and then let's go ahead and start getting our new positioning in, right? Where do we get new positioning in? Inside of cost basis. These areas of interest where 3 million open interest was on ES, right? 3 million open interest is in this level, this green level. We tapped it. Are these not significant levels? Yes. Macro mindset. I am not biased any direction. I am looking to see if we can find 3 million open interest somewhere. I'm looking for the non-commercial traders to be net long, the commercial traders to be net short. Okay? Let's go over that real quick. I am looking for, as you can see, non-commercial is net long. Commercial is net short. Okay, that happened. But if we go through and we go all the way down, I stopped tracking this because it just became irrelevant to me because it was so clear. I just stopped tracking it. And I just started looking at the open interest. Because the open interest back in August was only 2 million. What are the non-commercial traders doing? The non-commercial traders are net short. They're overall short the market. What are the commercial traders? They are overall also short the market. What did that do going into December? It created the range for positioning for this short, this retracement we're seeing in the markets. It's all correlated. It's all on the open interest. You need to see commercial traders short, and you need to see non-commercial traders long. Do you see a sustained percentage here of the longs? Do you see a sustained percentage of longs being over 50% for an extended period of time? And I mean extended month over month over month, not just a small 2-3 week period. This is a 3-week period here. No. 3-week period, they went net long, and then they're back to covering into idiots, right? Then they went net long, and then they're back to covering into idiots as prices move higher. This was net short for quite some time, right? Net short, but it's around 50%. It's not significant enough. Look at fucking retail. 60% retail traders long. Look at retail. Since January 2024, 61%, 57, 58, 59, 58, 57. Retail has been net long this entire time, moving prices higher, and they're just providing the liquidity for the fucking move down. Excuse my language. Let's just be smart with it. Last thing I want to go over real quick is, I'm not sure if I went over this already, but we're going to go over it. Cost basis. Based off of the open interest and the positioning of the institutions, we determined that this level was the level of cost basis. We were rotating around it on a daily. What goes above it goes below it. Breakout, pull back, continue. When you do get one of those breaks with, and this is fractal. This is on every time period, every tick chart, every minute chart, every hour chart, every 30-minute chart. When you find a cost basis where the numbers correlate properly, you get a breakout, and then you get your extension. The extension tends to be 4 ranged-based measured moves, or 4 extensions of this. So you copy the cost basis and you paste it 1, paste it 2, paste it 3, paste it 4, exhaustion, roll back down all the way to cost basis and those significant levels. If this is not healthy, if you do not see that this is healthy for the markets, you are not, in my opinion, and you can call me an idiot if you want, not seeing the macro mindset properly with the numbers that do not lie. You can manipulate options, you can manipulate VIX, you cannot manipulate the open interest and the positioning of the institutions because they have to report those positions weekly. Okay? This is a perfect freaking move. This is beautiful. Okay, the final thing I want to go over is the fact that here we are. If you are going to be longing ES here, fine. You got some sort of a big spot to look at. But we did one thing, price action wise. We moved lower. We got to go down and retest that low. They're looking to take out that low. So from there, that's when I looked at NQ. What do we got going on here on NQ? Let's go to the minute time frame here. And let's go on EQ right now. Or EQ, NQ. The most important thing, I threw some VWAPs on here, some VWAP bands on here, because yesterday was a clear trading range that we rotated. We rotated, we held the range, right? Clear range. So I used that because we were holding VWAP. We formed a range. We are going to rotate back into that range. And what are we doing today? We are rotating back into the range. Here's our midline, right? Here's our target. What goes above the range goes below the range. Let's go to our tick charts. Here's our 4,000 tick chart. This is that range we had. You can see it on the minute chart, but here it is on the tick chart. What goes above the range goes below the range. They're looking to take out this low. There you go. Here's our range. We are fading the range. This is an area. Okay, let's go off. Let's just do a trend line. We have a trend line off of that low coming up. But since we are in a bearish market, what we do, we came up. ICT traders call this liquidity levels. This was a move. They were targeting a liquidity level. They retested it, and they're dumping it down. Do not be bullish here. This is not a bullish move. Bulls reached their objective. They took out the liquidity, and then they retested it. Bulls took out their liquidity at this level. They moved up, and they retested it. The bullish move is done. Stop buying. It's time for the bears. The bears moved price lower. Sold into this trap here. Bulls couldn't break out. And now the same thing. Those bears have a strong move down. They're looking to retest it. What do we have? We have a range rotation. We're fading yesterday's range here. We're fading yesterday's range, the range high, fading it down. This is nothing more than a flag, and it's a powerful flag because the flag came all the way up into a trap, into a liquidity level, into a trap, and we're looking to go low. Target, low of day, all the way down here. If you are scalpers, you know you scalp to the midline, scalp to the bottom, and then you scalp using these prior swings as targets. But ultimately, they want to take out that low. Depends how you want to trade this. But you know what? Conservatively, you got target number 1 here. This is target number 2. And then target number 3, you're looking to just trail down as you try taking out that low and that range rotation. Okay? All right. Final thing, and I think we need to go over it. These markets are going to fucking destroy stop losses. Okay, they're going to destroy stop losses. When I originally entered this trade, my stop loss was up here. Why was my stop loss up here? Because this level is not structure. Market structure is simply one thing and one thing only. Higher highs, higher lows. Lower highs, lower lows, lower highs, lower, yeah, all that shit, right? You go over that stuff. It's basic. That's market structure. So prior to this most recent move down, you know, we entered a trade somewhere around here at the high of this range. We're fading it. This is a micro, or I'm sorry, this is a mini. I'm not trading minis in this market right now because in order to fade this range, you would have had to have, if you were looking to enter at the break of the range, 17,566, your stop loss needed to be out here at 838. So almost a 200-point move. Or 5, 6, 7, 8. Yeah, almost a 300-point move. Now that we broke and made a new low, we pulled back and made a new low. Now, guess where structure is? Structure is right here. That's market structure. And what are we doing? Look at this beautiful range, fade, you know, beautiful. Wish I took it. Too busy trying to get my analysis correct, get my mind wrapped around this market. This week for me is just staying ahead of the move, staying ahead of the market, finding our balances so we can go ahead and utilize that during the news coming up. I'm going to let this week digest, let all this happen. Come in, with a head full of steam next week. Look at that beautiful, 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 beautiful range fade here, right? No reason to be bullish. When you zoom in, the retest there on NQ, beautiful into the trap zone, ICT traders, liquidity, however you want to look at it, markets are fractal. And this happens everywhere. I'm looking for something like this to form on the daily chart. What do we have on the daily chart though? Here you go. Here is our, right? Here's going to be the bottom of the range, right? We broke the midline. Here's the top of the range. ES, like I said, we're looking at this as a price action standpoint because markets are fractal. They do the same thing on every time frame. It doesn't matter what time frame you're looking at. They do the same freaking thing. So, what are we doing? We're looking for the range to get retested. Somewhere down here, open interest. And we're looking for it. That's it. Simple enough. That's my mindset. That's my macro. That's everything. That's why I ignore the VIX. That's why I think the VIX is manipulated. SPX manipulates the VIX. And you cannot manipulate the open interest. You cannot manipulate the raw price actions. That's why, for me, futures is king. The numbers on futures are king. That's it. Yeah, sometimes price will move to close high levels on the options, but they're not going to move into those wild, crazy, out of the money ones. Those are manipulated. Those can get taken off, and then VIX can fucking plummet again, and then we can just form some sort of a range, some sort of a cost basis to utilize moving forward. But you cannot manipulate the open interest and the positioning of the institutions. All right, that's it. That's the video. Good luck, guys. Be safe. I'm risk off this week. Let it happen. Everything you learned in 2021, 2022, you should be putting into practice now. Everything you learned here. This is your opportunity. All right, good luck, guys.